We've committed to pay half of that return out by way of dividend, the 50% payout ratio. So I think mathematically, when you run that through, what you'll see is a very material step up in dividends for next year.
We're going to do everything we can to try to avoid a recession, but we are committed to bringing inflation down, and we are going to do what we need to do. And we are a long way away from achieving an economy that is back at 2% inflation, and that's where we need to get to.
I think Jay Powell said things that, to be blunt, were analytically indefensible. He claimed twice in his press conference that the Fed was now at the neutral interest rate, calling it 2.5.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Well, HSBC shares jump over 5% in London as profit tops estimates. The lender also commits to restoring its dividend to pre-COVID levels. Slumping recovery, Chinese manufacturing unexpectedly contracts in July and services weaken, highlighting the fragility of the nation's economic rebound. Plus, Kashkari, the hawk Fed dove, Neel Kashkari, says the FOMC is committed to slowing inflation to its 2% goal. U.S. futures dip, Asian stocks and European stocks push higher. Now, first thing is first, let's check in on the markets. We're also getting some PMI figures for the euro area. I mean, I was saying that actually a lot of these European stocks are higher. Let's get to the European stocks if we have them. But July manufacturing actually came in pretty much as expected. That PMI 49.8, the preliminary came in at 49.6. All right, we have S&P futures down 0.2%. That U.S. 10-year yield at 2.6812. The dollar, 1,264. It'd be great also if we had the European one. So let's get to the map straight, because this is probably the biggest story of the day. We had some encouraging earnings news from some of the banks, which is why we started the day off with a bit of pressure on some of these individual countries. But now, for example, the FTSE is gaining some 0.4%, so we're seeing gains accelerate. Also, the FTSE MIB over in Italy gaining 0.6%. Overall, the story is not only of earnings, but interest rates giving a little bit of a lift to some of the banks. HSBC, case in point, also saying they will resume dividends for the first time. That will be in 2023. Investors also assessing remarks from Federal Reserve officials. I'm thinking of Neel Kashkari as saying that, of course, higher interest rates are needed to bring down inflation under control. You can see the IBEX over in Spain gaining 0.7%. Now, China's factory activity contracted unexpectedly in July. Property sales continue to shrink, highlighting the fragility of the economy's recovery. That's as the government sticks to its strict COVID-0 approach of tightening restrictions when virus outbreaks occur. Well, let's bring in Bloomberg's economy reporter, Tom Hancock. Tom, thank you so much for joining us. I mean, what's going on in China right now?
Well, what the data today is telling us is that the bounce back we had in economic activity in June after the virus situation improved and cities like Shanghai were able to lift their lockdowns just wasn't sustained the following months. Things got worse again with the virus. And also, as we know from the headlines every day, the situation for the property market has continued to worsen, and consumer confidence is still really low in China, as well as a very high unemployment rate for young people, a grim outlook for jobs. So this is going to weigh on all the economies that export to China, whether that's Germany and South Korea for machinery or commodities exporters.
So, Tom, what does it mean for China going forward? Is there anything that policymakers will do to, for example, help the property market, which, let's remember, is huge?
Yes, it's really a tough situation for Beijing because they don't want to see a disorderly collapse in the property market. But they've also been very clear that they never want to rely on the property market for stimulus again. And so all they've got to rely on for stimulus really is infrastructure. And the infrastructure sector isn't really big enough to support all of China's economy. So the bottom line is that growth this year is probably going to be even lower than current expectations.
Tom, thank you so much. Tom Hancock there on the very latest from China. And joining us to talk about the markets and to talk about the economy, everything in between, Moritz Kraemer, Chief Economist and Head of Research at LBBW. Moritz, thank you for joining us. Let's start with China. If you look at China, we thought it'd be fine. We saw money going in from investors. And then today we have concerns about the property market. What's your take on it?
Yeah, good morning, Francine. I think this has been a long time coming. I mean, China has for many years always propping up the economy and trying to keep growth above what is really a sustainable rate, and mostly by encouraging investment in real estate first and foremost. So I think this strategy has really hit the buffers now. This is sort of hard to negate anymore. So for China, for this year, I would guess that GDP growth would come in somewhere 3.5, but chances are we will never know what the real numbers are, because whether the Chinese authorities will admit to such a sharp slowdown remains yet to be seen.
So, Moritz, going forward, is China one of the biggest unknowns? I know we'll talk about inflation, the Fed, and the fact that Neil Kashkari is now saying, wait, we need to do more. But what's your take on the global economy as a whole?
Well, I think the global economy is slowing down. So for this year, probably overall growth rate will be half of what it was last year, some 3% maybe on average, and even less next year. So the big economic blocks are all going into a slowdown / recession simultaneously. That's the US, China, and the euro area. And there's not much dynamism anywhere else right now. So we're clearly going into a slowdown. And I think this will contribute also to a pause of the interest rate hikes come next year.
So, Moritz, what are you looking for in the U.S. in terms of giving us, are we now pricing in a recession, a technical recession, which is even worse than like a deeper recession? What's the parallel between markets and what we're living through in the economy right now?
Well, I think it depends on where you look. I think that the bond markets, you've seen sort of the peaks of long-term rates. If you look at sort of 2-3 year bonds, treasury bonds, you can see them coming down quite a lot. So this suggests strongly that the markets are anticipating this slowdown. If you look at the equity market, on the other hand, is being greatly buoyed by a relatively positive earnings season, which may be something to remember, because if sort of my expectation comes true that we are sort of also in the US economy bordering a recessionary environment, then the earnings will just have to take a hit going forward. And that means that on the equity market, there's still some room below that right. People should look out for.
Moritz, this is one of my favorite charts, and thank you, Valerie, for putting it together. It's basically financial conditions. I mean, we should really watch it on a weekly basis. What's interesting is that financial conditions are now looser than when we had that initial Fed hike in March. What does it tell you about what we should look at going forward?
Well, I think the Fed is not done yet. We've just heard Larry Summers before speaking or being quoted. So I would agree with him on that one, if I may say so. So I would think that there is still sort of a couple of hikes down the sleeve, but the Fed will probably stop at 3.5%, because what we will also see is, as the economic environment becomes more difficult, the market conditions will also tighten. The banks will be more careful, but also the capital markets may not be close to weaker names as they have been so far. So all things considered, I would believe that the Fed will stop at 3.5%, and it's pretty much done after that.
Okay, really interesting. Thank you. Moritz Kraemer, Chief Economist and Head of Research at LBBW, stays with us. We'll talk a lot more about what it looks like for the markets. Coming up, Neil Kashkari says the Fed will need to keep an eye on inflation and do what it needs to do to keep prices down. We'll look at how markets are reacting. That's coming up next, and this is Bloomberg.
I think Jay Powell said things that, to be blunt, were analytically indefensible. He claimed twice in his press conference that the Fed was now at the neutral interest rate, calling it 2.5.
We're going to do everything we can to try to avoid a recession, but we are committed to bringing inflation down, and we are going to do what we need to do. And we are a long way away from achieving an economy that is back at 2% inflation, and that's where we need to get to.
Well, Minneapolis Fed President Neil Kashkari and the former Treasury Secretary Larry Summers there on the state of the U.S. economy. We're back with Moritz Kraemer, Chief Economist and Head of Research at LBBW. Moritz, we were talking about this before. I mean, Larry Summers, I have to say, makes me laugh because he just never pulls any punches. I mean, he's like, this is analytically indefensible. Has he been right all along, or are we now giving him too much credit?
Well, I think he's been broadly right. I mean, the Fed, like other central banks, they've been waiting too long. They've been behind the curve. Some of them, like the ECB, have been so behind they didn't even see the curve anymore. The ECB is much slower in catching up. So the Fed is really racing to reconquer control over the inflation situation. And I think you need to give them credit for that. I think 2.5. Whether that's the neutral rate, that's a guessing game, but it's certainly not the target rate where this cycle will end, which will go well beyond 3%.
But Moritz, overall, is it that they're really behind the curve, or is it actually that we've come to a realization that central banks cannot be the only game in town, and that what it feels like?
Yeah, well, central banks have been exceptionally lucky in the last 2 decades or so because you had a lot of deflationary pressure coming through globalization, coming through China, entering the world trading system when the country joined WTO. All of this is going into reverse now. So all the deflationary pressure is now gone. Now you have inflationary pressure also from trade. You have inflationary pressure because of aging populations. Of course, you have the energy situation, and now suddenly everything is going against you, and the central banks realize that they've been probably too confident about their own capabilities of controlling inflation, when a lot of it was also due to good luck.
Moritz, what is the most interesting currency right now? We've seen some of these quirks play up. I don't know whether the carry trades are back and whether that is here for a long time.
Well, I think the one that everyone watches and that I think is really central as well is, of course, the euro-dollar cross rate, which is hovering around parity. Given my expectation that the Eurozone is much closer and almost a foregone conclusion that it will fall into a recession, there's more weakness for the euro ahead. But short of a complete gas stop of Russian gas in the coming weeks or so, I would think it's not going to go very much below parity and should recover by the end of the year somewhat. But that's the critical rate, because also for the Eurozone and the ECB, the lower the euro becomes, the more inflationary the backdrop becomes as well. And that makes their tasks just so much harder.
Moritz, thanks so much. As always, Moritz Kraemer, their Chief Economist and Head of Research at LBBW. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. England has won a major international football tournament for the first time in more than 50 years. After extra time, the Lionesses beat Germany 2-1 for their first ever UEFA Championship. It's the country's biggest win since the men's team brought home the World Cup in 1966. The final was watched by a record crowd of more than 87,000 at Wembley, underscoring the massive growth in the women's game. The latest data from China shows the country's rebound is still fragile. Factory activity unexpectedly contracted in July as property sales continue to shrink. It's adding to calls for more policy stimulus to fuel growth. The government is sticking to its strict COVID-0 policy of tightening restrictions when virus outbreaks occur. President Biden has again tested positive for COVID-19 as he continues to deal with a rebound case of the disease. He says he's not symptomatic but will continue to isolate. He first tested positive on July the 21st and back then was experiencing mild symptoms. Trailblazing actress Nichelle Nichols, made famous playing Lieutenant Uhura on Star Trek, has died aged 89. She eroded racial and gender stereotypes, taking part in the first kiss between black and white actors on US network television. Early in the series, Nichols experienced mistreatment by the studio and decided to leave the show, but civil rights leader Martin Luther King persuaded her to stay. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thanks so much. Coming up, the summer of strikes continues as Lufthansa faces more turmoil. More on that story next, and this is Bloomberg.
The energy markets are tight and will remain tight and volatile, I think, not only for the remainder of this year, but also well into next year.
We do see a softening of economic conditions in the second half of the year and potentially a recession, at least at this point, a modest recession in Germany and a slowdown in Europe.
We are now preparing a short-term contingency plan to protect our German plants from that gas supply crisis.
Many factors that come into this, which creates a very, very complex picture, which is hard to predict. But what we do see is continued volatility and very tight markets going forward.
We have already reduced our gas consumption by 10% in Germany, which would be the country that we would have to focus on. And we have put together plans to be able to reduce gas consumption by up to 50%. While maintaining full operations.
For Europe, for example, and we also don't expect a significant downturn unless the gas supplies really get cut off.
Well, voices there talking about Europe's crisis. Many chief executives, of course, warning on what could come. More on that later in the program. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. This is what the markets are telling us. Now, we did see a reversal in the last, I think, hour or so. European stocks actually now on the upside. This, despite some warnings from China. We had a slide in China factory activity underscoring some of the global challenges. And then the other story, of course, is what's happening to the Italian 10-year yield, falling below 3% for the first time since May, now a little bit back up, but it is really investors putting aside concerns that the new government will renege on some of the commitments made to unlock this 200 billion euros of European Union funds that sent the 10-year yield below 3% for the first time since May. Now, Lufthansa may face further disruption after its pilots voted for strikes if they're considered necessary to force a wage deal. The move could unleash another wave of cancellations unless the airline's negotiators and labor representatives can settle their differences. Now, elsewhere in the summer of strikes, UK dock workers plan to bring Britain's biggest container ship port to a standstill, worsening the country's supply chain problems amid a bitter dispute between unions and government ministers. And finally, this week, barristers and workers also at British Telecom will be striking in the UK. Well, joining us now to shed light on this week in the UK is Bloomberg's Lizzie Burton. Lizzie, wow, these strikes. I mean, we're just not used to it here in the UK. What does it mean for the economy?
Well, the cost is twofold. So on the one hand, there's the actual cost of the disruption. When it comes to travel, the Centre for Economics and Business Research estimated that the June strikes would cost £100 million. Now, really, that's small fry compared to the overall size of the UK economy. It just feels big because we all use the trains, but really post-pandemic we're much more adapted to working from home and to cycling to work. There's also the second part, the risk of a wage price spiral, but Bloomberg Economics says it's not a major risk because compared to the 1970s we're much less unionised, the Bank of England's independent and there's more automation.
Okay, I mean, it is incredible, actually, how also the markets have changed in that period. All right, Bank of England, it's exciting, but actually fewer traders now believe that we're going to see a 50 basis point hike. Why?
Because of the recession risk. And you had Danny Blanchpower, former MPC member, although Archdove, saying that
Archdove.
Yeah, we're already in a recession in the UK, says Danny. But really, we shouldn't underestimate the possibility of a 25 basis point hike on Thursday. The bank's expected to do 50, but there's less pressure on the BOE to go for a supersized hike like the Fed and the ECB because it started sooner. You heard Andrew Bailey at his Mansion House speech saying that 50 basis points isn't locked in. Everybody seems to have read this as saying, he's mentioned 50, they're going to do it, but maybe we should take him at face value. And if you look at the economic data, the jobs market does seem to have passed peak tightness. People are going back to the workforce to deal with the cost of living crisis.
Yeah, really, I mean, one of the most interesting, actually, decisions decisions that we could see. Danny Blanchfield, by the way, on fire on Twitter, as always. All right, then there's a leadership contest, right, of who will lead the Tory party. Is there anyone who supports Rishi Sunak at this point?
There are lots, and I speak to MPs in his camp all the time who are still confident that he can turn this around, but you have to ask, really, what is that founded on? Because Truss is said by the betting markets to have a 90% chance of being the next occupant at number 10. Sunak has announced these new, he's expected to announce these plans for tax cuts, income tax cuts to the basic rate from 20% to 16%, but Truss's camp saying that this is just another desperate attempt, another U-turn to claw back the gap on Truss.
Thank you so much, Lizzie Burden there with the very latest on a big week, of course, here in the UK, and then we look at pound. Talking about currencies, our Valerie just pointed to the fact that the euro is weakest ever versus a basket of EM foreign exchange. Now, coming up, HSBC profit beats estimates. We hear from the lender's CFO about plans to boost dividends. That's coming up next, and this is Bloomberg. HSBC shares jump over 5% in London as profit tops estimates. The lender also commits to restoring its dividend to pre-COVID levels. Slumping recovery, Chinese manufacturing unexpectedly contracts in July. Services weaken, highlighting the fragility of the nation's economic rebound. Plus, Kashkari, the hawk, Fed dove, Neil Kashkari, says the FOMC is committed to slowing inflation to its 2% goal. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, if you look at the markets, we did see a reversal about 20 minutes into the opening session. This is a picture overall. I think there's still a bit of pressure on some of the U.S. futures, but European stocks certainly rising as banks' earnings delivering on the upside. Investors also assessing remarks from central bankers that higher interest rates are needed to bring inflation under control. This is a picture overall. We're also looking at crude oil, 102.72. Then we're getting some UK manufacturing figures. I think it's PMI, and I think they're out just now for the month of July. It is coming in at 52.1. We were expecting a 52.2 figure. That was a preliminary figure, so nothing huge there. You can see pound holding onto what we were seeing before that figure came out, 122.06. So that's it for some of the market checks. Let's get on to some of the other big stories, and HSBC returning to, of course, strong results, beating estimates and committing to returning to quarterly dividends. Now, a short time ago, the lender's chief financial officer spoke to Bloomberg about what helps drive the results.
Rising rates is certainly beneficial to us. Interest income was up 20% Q2 on Q2. Revenues were up 12% overall. We also kept costs flat, so we had an enormous amount of operating leverage, 12% jaws in the quarter. And we also had a one-off tax benefit too, so profits attributable to ordinary shareholders are up 60% on a year ago. So we're very pleased with these results.
Your ECL, expected credit losses of over $1 billion. Where are the biggest source of concern in the credit losses? Is it China?
Yeah, look, there's only, I think, one portfolio globally, Manus, that we're paying close attention to, which is really the offshore book of our China commercial real estate exposure. Just over $12 billion of exposure, or about a third of it is substandard or impaired. We have taken about another $150 million worth of provisions this quarter for that. And I think, as you know, the outlook for the Chinese real estate continues to be weak.
Ping An, have you had any formal, informal, bilaterals, any conversations at all with them so far?
Yeah, look, we're definitely talking to Ping An and continue to talk with them. You know, they've raised, as you would expect with any major shareholder raising issues with us. We're taking it seriously. We've still got work ongoing on the structural alternatives that they've proposed. I mean, based on the work that we've done
today.
Are they
actively asking you to split the bank, Ewan? Are they making a categoric request to split the bank and the listing?
Well, certainly in terms of what we understand that they're looking for is some form of structural alternative. We've spent some time together with outside advisors looking at it. We've put some details into our investor materials today. But I think when we look at all of the various structural alternatives, a combination of upfront cost, a lot of complexity, it would take us 3 to 5 years to implement any form of material structural alternative, together with high ongoing dyssynergies. So, we haven't completed our work, but based on what we can see today, it's very, very hard to find any value case that we could put in front of shareholders.
So 3 to 5 years before a material change. So you are actively talking about a separation and a Hong Kong or a Chinese listing for HSBC. That's what a material change would be.
Not at all, Manus. Actually, our conclusion is that the structural alternatives relative to the standalone plan just don't stack up. We don't see the value case to do any of it relative to the plan that we see as beginning to deliver material near-term value upside for shareholders with very execution risk that's totally in our control.
What kind of dividend do you expect to reward with a special dividend to sort of hold the investors' nerve with you? How do you set up the dividend narrative for 2023?
Well, we've announced today that we're returning to quarterly dividends. We're very conscious of the fact that pre-COVID we were paying out at 51 cents a share. We're very keen to get back there as soon as possible. We certainly would expect, based on the earnings trajectory of the bank, to be back there in the next couple of years.
Well, that was the HSBC CFO, Ewan Stevenson. Now let's get more from our breaking news editor in Taipei, Cindy Wan. Cindy, a lot going on, of course, in Asia with that, visit or not of Nancy Pelosi. Will she go to Taiwan, and if so, when?
Exactly. Will she or won't she? That's a question many people in Taiwan or possibly around the world are eager to find out. So far, we have very little information about Pelosi's Taiwan visit, but if she does, it's going to be the first time in 25 years for someone in her post to visit this democratically ruled island. It's going to be a significant move and a huge boost to Taiwan's visibility. And Taiwanese government so far has been very tight-lipped about Pelosi's trip. When asked by reporters in Taipei this morning, Taiwanese Premier Su Jin-chang told reporters by neither confirming or denying the trip, by just saying that, well, we welcome any visit of the foreign visitors and we respect the timing of their visit according to their plan. But judging from media reports we've seen in Taiwanese media these days, that there are speculation of Pelosi could come in Taiwan on Tuesday, Wednesday, or Thursday. So she's in Singapore now, and she will visit South Korea, Japan in the following days. To be honest, who knows? Her plan could just divert into Taiwan at any point of her trip.
But Cindy, how will China react? Could this be the biggest foreign policy mistake of the decade?
Yeah, that's a very important question to ask, to be honest. China has warned the United States of grave consequences if Pelosi visits Taiwan. And US President Biden also said that military thing, it's not a good idea for Pelosi to visit Taiwan right now. So it's widely expected that China would react very strongly should Pelosi really visit Taiwan. But the question is what? There are several possible scenarios for China's reaction. First of all, despite near daily incursions into Taiwan's ADIZ, or Air Defense Identification Zone, China could still send large number of POA war planes into Taiwan's ADIZ. And the current record stood at 56 that happened in October last year, and that's believed to be in response to the US-led military exercises. And another scenario could be that the POA war planes could cross the Strait Median Line. Yeah. That happened several times before, especially when there are key U.S. government officials visiting Taiwan. So there are experts saying that if Pelosi do visit Taiwan, it's possible that POA would send the war planes in the narrowest part of the Taiwan Strait for an extended period of time. In that case, that would create huge pressure. Yes.
Yeah, and this would be, the President of the United States of America is actually against Nancy Pelosi visiting Taiwan. So what would it achieve? In what capacity would she do this?
Well, it's believed that Pelosi's visit could just very likely be symbolic. It would just be a symbolic move for the House Speaker to show the strong support from the United States to Taiwan, and also just to show that they wanna like support freedom in the democratically ruled island here in Taiwan.
Thank you so much for joining us. Cindy Wang there, of course, from Taipei. If the market's probably on tenterhooks after the speculation that was then denied. And now there's again voices on social media saying she may show up tomorrow. We'll have plenty more, of course, on this foreign policy as it's unfolding. Coming up, Germany scrambles to get ready for what's likely to be its hardest winter in decades. But with few viable options for alternatives to Russian supplies, is rationing on the table? We'll have plenty more on that next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. England has won a major international football tournament for the first time in more than 50 years. After extra time, the Lionesses beat Germany 2-1 for their first ever UEFA Championship. It's the country's biggest win since the men's team brought home the World Cup in 1966. The final was watched by a record crowd of more than 87,000 at Wembley, underscoring the massive growth of the women's game. The latest data from China shows the country's rebound is still fragile. Factory activity unexpectedly contracted in July as property sales continued to shrink. It's adding to calls for more policy stimulus to fuel growth. The government is sticking to its strict COVID-0 policy of tightening restrictions when virus outbreaks occur. Deutsche Lufthansa may face further disruption. Its pilots have voted for strikes if they've considered necessary to force through a wage deal. It's a move that could unleash another wave of cancellations unless the airline's negotiators and labour representatives can settle their differences. That's on top of the 7,000 flights the company has already cancelled this summer. President Biden has again tested positive for COVID-19 as he continues to deal with a rebound case of the disease. He says he's not symptomatic but will continue to isolate. He first tested positive on July the 21st and back then was experiencing mild symptoms. The trailblazing actress Nichelle Nichols, made famous playing Lieutenant Uhura on Star Trek, has died aged 89. She eroded racial and gender stereotypes, taking part in the first kiss between black and white actors on US network television. Early in the series, Nichols experienced mistreatment by the studio and decided to leave the show, but civil rights leader Martin Luther King persuaded her to stay. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thank you so much. Now, various voices from big business. So we'll have plenty more, of course, on that and what they think about Europe's gas crisis. Now, Germany in particular is under pressure as it scrambles to get ready for what's likely to be its hardest winter in decades. Well, with a few viable options for alternatives to Russian supplies, the focus has shifted to clamping down on demand, and rationing has become increasingly likely. Well, let's get more with Bloomberg's William Wilkes from Frankfurt. Will, thank you for joining us. How bad does it get?
Francine, good morning. It could get quite bad this winter. I think it depends on the weather in large part, but companies are kind of finalising emergency plans for cutting production and, municipalities are preparing to protect citizens in case there isn't enough gas, that the prices go super high and people can't afford to heat their homes and they need a sanctuary away from the cold. But it really, a lot depends on how cold the winter is.
I mean, we don't, we talk about rationing. I mean, rationing is definitely coming. If you switch off, for example, if you don't heat the pools, I mean, it seems that this would have a very marginal impact. How much does the German economy have to contract to actually make a meaningful difference on how much gas it uses?
That's an interesting and unknown question at the moment, Francine. Yeah, all these energy efficiency measures are making kind of marginal differences. But yeah, if it came to kind of a stop of gas and Germany, had to abruptly shut gas, and it would require a recession and big cuts in kind of production and some really significant economic fallout to balance, to get prices back down to a kind of normal level. And that would have implications for everywhere in Europe, for all industrial supply chains and other major economies in Europe. If Germany goes into a deep gas crisis-led recession, then we'll all feel it.
Yeah, we certainly will all feel it. Will, what are you working on next? Again, is it a matter of when the embargo comes or if it comes?
I think it's probably a question of more when it comes rather than if at this point. German executives fully expect this to happen, and probably in the first serious cold snap of the winter, which would be kind of the Putin exiting, this tool on the maximum kind of pain point. So we're working on how companies are preparing for this. There's a lot of kind of frantic last minute kind of or last month kind of scenario planning and kind of checking supply chains to see where potential weaknesses or potential kind of hidden stumbling points are. And that work will continue right until it happens, and then we'll see how well all these crisis plans have worked, and and how Germany copes with this thing that everyone knows is coming down the track.
All right, really interesting. Well, thank you so much, Will Wilkes there in Frankfurt. Coming up, the end of the crypto winter. Now, some analysts think it might be. We'll take a look at Bitcoin next. I'm excited about this next section. This is Bloomberg.
To me, it's that company in Cupertino. It's Apple, because I think that's one. It's an underestimated demand cycle still, even with a swirling macro in terms of iPhone 14. You got a quarter of the base, about 225 million, that have not upgraded in 3.5 years.
Everyone had become so bearish. The economic data is very mixed, but not universally negative. And I think there was some room, particularly from some of the systematic players and things, for a little support in the market near term.
I think those companies that have diverse and durable business models are probably going to fare best in this kind of environment.
Google and Microsoft were actually very, very strong. They have emerged as leaders during these very challenging macro times.
Any tech monopoly is going to be a flight for safety, right? Where investors want to put their money in the less risky places that can still grow.
Guests answering their MLive Pulse question on which of the tech giants have the biggest upsides. It makes for some really interesting listenings, especially looking at the various differences from all of our guests. We'll talk a lot about tech shortly, but now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Deutsche Lufthansa may face further disruption. Its pilots have voted for strikes if they've considered necessary to force through a wage deal. It's a move that could unleash another wave of cancellations unless the airline's negotiators and labour representatives can settle their differences. That's on top of the 7,000 flights the company has already cancelled this summer. The world's most indebted property developer, China Evergrande, has failed to deliver a preliminary restructuring plan that it promised by the end of July. Instead, the real estate giant presented what it calls preliminary restructuring principles for its offshore debt. The stakes are high, with total liabilities of about $300 billion. Any restructuring could be among the biggest ever in China. Alibaba says it will strive to maintain its US listing after the SEC added it to a list of Chinese firms that face removal. The firm's addition starts a 3-year clock to a final delisting. A key issue is Beijing's refusal to permit American officials to review their auditors' work. That's the Bloomberg Business Flash. Francine.
Laura, thank you so much. Now, Bitcoin declining after reaching the highest level since mid-June on Saturday amid optimism that the market may have recovered from its worst levels. Now, to dive deeper into this, let's bring in Bloomberg's crypto reporter, Emily Nicole. Emily, great to have you on the program to make us smarter about Bitcoin. Now, what's been happening to Bitcoin over the last few weeks?
So it's definitely been a rocky few weeks for Bitcoin, but it's still its best month this year. We've seen a lot of activity going up and above 20,000 as kind of it's still its bottom, but it's moving around that point. Over the weekend, we saw Bitcoin rise up to more than 24,000. That was its peak, and has since come down a bit. It's down about 2% this morning. And what we think happened is there was, a lot of trading over the weekend, but the market's very illiquid then. And so even though it tried to push higher, there just wasn't enough liquidity in the market to maintain that. And so coming into Monday, as more liquidity comes onto the market, we're seeing a little bit of a pullback this morning.
So is this rather unique compared to, some of the others that we've seen recently?
So we definitely have some of the twin efforts coming into the market of, we've seen the Fed hike from last week. Some of the things that would normally push assets down, Bitcoin has really kind of rallied in those moments and hasn't really been as weak as some of the other parts of the traditional finance market, at least. And so that sense that Bitcoin is, a store of value, a hedge against inflation, that argument hasn't yet gained proper weight again, but it is starting to see some signs of strength as Bitcoin does kind of stay stable in a market where everything else is crashing.
So, Emily, what are you looking for? I don't know whether, I'm not sure whether there's fundamentals or technicals that we should be watching out for, but how will it play out in August? The $1 trillion question. I know we'd all be rich if you got it right.
Yeah, exactly. Well, I was speaking to a crypto hedge fund manager just about 10 minutes ago, and he was saying to me that it's about 24,400 is the mark that we're next looking for Bitcoin, and 1,750 for Ether. Those are the next technical levels that it needs to break through, but it'll need to be happening in a market where there's a bit more liquidity, and over the weekend there just wasn't enough of that. So those are the points that I'll be watching for over the next few days.
Are there some of the big names? I know there's been quite a lot going on in the last 6 weeks or so, 6 or 7 weeks, like a lot of, the big names, like Novogratz that were full in, that then went out. Is that changing around a lot?
There's definitely some movement happening from whales in the market, but the problem is that in the areas where Bitcoin needs to push through, so say from 24,000 to 28,000, there's just really a dearth of activity there, at least according to the hedge fund manager that I just spoke to. And that's the major issue. That's why we need to kind of see some whales get back into the market in order to prop it up, because otherwise the crypto isn't just going to be able to make that reach back up and really kind of signal the end of the crypto winter as we know it.
Emily, as always, thank you so much for making us smart on Bitcoin and all things stablecoin. Emily Nicole joining us. Now, this is a picture across the markets. So we look at some of the yields. I know we talked a lot about Italian yields. This is after we're trying to figure out if when we go to these snap elections, September 25th, who comes into power and whether they renege on some of the promises that they did to the European Union under Draghi's government. Now, European stocks ticking higher, corporate earnings continuing to deliver upside surprises. Investors now assessing remarks from central bankers that higher interest rates are needed to bring inflation under control. I'm looking, for example, at HSBC. They posted better than estimated profits. So that's giving a nice little lift to a lot of these bank stories. Dollar falling, treasury yields inching higher, but at about 2.67, the 10-year rate still well down from June's peak at 3.5%. Yen, also one to look out for, jumping for a fourth session versus the dollar, oil retreating. Well, Bloomberg Surveillance early edition continues in the next hour. Matt Miller and Kailey Leinz are in New York. Anna Edwards is here in London. They'll go through all of the market moves. They'll, of course, talk also about Nancy Pelosi. Will she or will she not show up in Taiwan? This is probably the biggest foreign policy trip that we could see this decade. How that plays out in the markets is still to be seen. We'll also look at financial conditions after we heard from Neil Kashkari over the weekend. This is Bloomberg.
Investors should recognize that there's been a lot of ups and downs in the economy in this quite fast-moving cycle.
I think we're still at great risk of a recession here.
It's a tough market. It's a tough market for allocators and individual investors.
We're focused on data, which is going to be much more volatile.
If you put your long-term investor lenses on, then it is still a great time to invest.
This is Bloomberg Surveillance, early edition with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. China's economic rebound is still fragile. Factory activity unexpectedly contracts in July, and property sales from the country's top developers continue to fall. The Fed renews its pledge to reduce long-term inflation to 2%. Minneapolis Fed President Neil Kashkari says the central bank will do whatever's necessary. And the fate of the Senate Democrats' tax, climate and drugs bill may be up to one senator. For now, Arizona's Kristen Sinema isn't saying how she'll vote. Welcome to Bloomberg Surveillance. This is the early edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz over in New York. Well, Kailey, European stocks trying very hard to start August the way we conducted July. Positive for risk assets, of course. The Asia sector, though, having to deal with that weak data out of China.
Yeah, absolutely, Anna. It didn't weigh on risk sentiment too much in terms of equities because you did have stocks in the region broadly higher in Japan, Hong Kong, and yes, even in China. The MSCI Asia Pacific Index as a whole was up about 0.75%. But that China data, of course, showing manufacturing PMIs back in contraction territory in the month of July, coming in at 49. That was below what economists expected. Really shows the fragility of the Chinese recovery as they continue to pursue COVID zero policy. And of course, a lot of that weakness is stemming from the property sector, which continues to be in crisis. And actually, a Bloomberg intelligence gauge of those Chinese developing stocks fell about 1.3% overnight to the lowest level since all the way back in March. And while you didn't see too much risk appetite being lost from equities, you definitely still saw that growth concern reflected in the bond market, with the Chinese 10-year yield coming in about 3 basis points at 273. That is the lowest level going back to May. And finally, in foreign exchange, I would note the continued strength of the Japanese yen, stronger against a dollar for the 4th day in a row. That is the longest winning streak going back to February. Right now, dollar yen trading just above 132, Matt.
All right, well, we are looking here at futures that are off just a bit to start off the month. Remember, in July, we were up over 9%, so a fantastic month for stocks. You can call it a bear market rally if you like. Nonetheless, if you were holding, you made money. U.S. 10-year yield right now rising just about 2 basis points to 266.85, so really low level for the 10-year yield, and that is actually a booster to stocks. So maybe this negative futures number could turn around. We do see NYMEX crude coming down right now, more than $2 a barrel, 96.50 on recession concerns. So that may be another relief for stocks if in the next 4.5 hours, we see something turn around. Bitcoin is off 2.2%, but at a relatively high level, 23,284. Nonetheless, it is very correlated to risk assets, and this could portend some more clouds coming in later today. Anna, what do you see in Europe?
Well, Europe taking a more glass half full look, I suppose, at the same data set then, Matt, because we see European stocks moving higher this morning. We have this pretty broad-based rally coming through across European equity markets. You'll see the Spanish and the Italian market flashing slightly greener than the rest, and there is some movement at the periphery. More on that in a moment. We've also had some data out this morning. So Euro area economic growth data grew at 0.7% in the second quarter. The median estimate, 0.2%. I think that is a hangover from last week, in fact, some of that data, so we'll leave that for a moment. But this is what we see on the markets picture right now. In fact, the data that we reacted to at the back end of last week. And to Matt's point, it was a really strong month in the month of July. So this is strength across Europe. Not all that much conviction behind it, perhaps, and especially as we see those US futures looking pretty negative. Let's have a look at some of the individual movers, though, because there are some really interesting stories, not least from the banking sector. More on HSBC in just a moment, but this is what we have right now. HSBC's share price moving up by 5.7%. The banking sector doing really well today, and that is helping to lift the London market. It seems higher interest rates and a commitment around future dividends lifting the prospects for that stock. Pearson, the online publishing business, they beat estimates, and it's what they're saying about costs and taking out costs that seems to be pleasing some of the analysts, and that stock up by more than 6%. Heineken, the beer maker, out with numbers, and again, backward looking, they did look to be better than the market had anticipated, but there was a slightly muted nature to the outlook, according to some analysts, and that weighing on the stock this morning, down by 1.8%. I mentioned that Italian stocks are doing pretty well, perhaps in connection with the same thing that's been driving 10-year yields in Italy back down below 3%, the first time in a few months that we've been there. And this really on hopes and expectations that perhaps even if we are going to see a change of leadership in Italy in September, that the new Prime Minister won't necessarily want to undo the progress that has been made on the fiscal front by Mario Draghi. Kailey.
All right, well, we will continue to watch Italian politics and UK politics as well this week, with the Tory party set to vote between Liz Truss and Rishi Sunak. But there is also still a lot on this week's agenda, including later today, we'll get U.S. ISM manufacturing numbers, those coming at 10 a.m. Eastern time. We'll also be hearing from several Fed officials. Chicago Fed President Charlie Evans and St. Louis Fed President Jim Bullard are set to speak at separate events on Tuesday. Then on Wednesday, there's an OPEC Plus meeting on output. Will the Biden administration get what it wants and have the coalition or the cartel pump more oil? Then the Bank of England will be making a rate decision coming on Thursday. Will the move be 50 basis points? And finally, rounding out the week with the U.S. payrolls report on Friday, that going to be absolutely crucial for the Federal Reserve, Matt.
All right, we'll be watching those numbers obviously very closely. Right now, let's see what's going on in China. Economic rebound there remaining fragile. Factory activity unexpectedly contracted in July. Tom Hancock, Bloomberg's China economy reporter, joins us now with the details. Tom?
Hi, yes. So the number for the PMI really showed that the expansion in Chinese economic activity that we saw in June after the COVID situation improved and lockdowns were lifted in places like Shanghai. That really ran out of steam in July. The COVID situation got worse. Housing market has been terrible, and consumer confidence is really close to an all-time low. And so what you're seeing is the result of that, plus a weakening export outlook for China. And so that's going to weigh on the countries that are dependent on Chinese demand, whether that's Germany and South Korea, who export a lot of manufactured goods to China, or big commodity producers. They're also going to find that Chinese import demand will continue to slow. And the stimulus that we got last week, signaled by the Chinese leadership, really looks like it won't be very large at all relative to what we've seen in previous slowdowns. So the outlook for China is likely to continue to deteriorate.
Okay, Tom, thanks very much. Bloomberg's Tom Hancock will continue to track the China story. And we will speak, in fact, as Tom suggests, to one of the companies that is busy supplying China with a lot of basic materials and get their take on where they think the economy goes next. Now, HSBC profit beat estimates propelled by rising interest rates. The lender is also vowing to restore its dividend to pre-COVID levels as soon as possible. The CFO, Ewan Stevenson, spoke with Bloomberg earlier.
We've committed to pay half of that return out by way of dividend, the 50% payout ratio. So I think mathematically, when you run that through, what you'll see is a very material step up in dividends for next year.
Talking about dividends there, Tom Metcalf, Bloomberg finance editor, joins us now. Tom, good morning. The shares are up, as I was just mentioning, quite strongly this morning. So what about this report do investors like?
Yeah, shares up more than 5%. And I think it's really, the outlook. So the bank came out and said, hey, look, we are going to be able to keep our costs under control next year. They're sort of estimating about 2% rise, which is pretty good in this inflationary environment. And then, of course, the return of the dividends has been a bone of contention for plenty of shareholders. So largely, HSBC doing the best they can to kind of make a case for staying as this global bank rather than splitting off their Asia unit, as some shareholders are calling for.
What's the story with Ping An's push for a breakup? They're the biggest shareholder, right?
Yeah, so obviously HSBC making the case against the Ping An argument. Pretty much if you go through the earnings, you hear what the CEO, the CFO were saying today. It's a pretty clear sort of step-by-step case for why they don't think that's a good idea. I mean, the results are certainly what I guess HSBC's management would have wanted for. It does, sort of point towards this is why we're a global bank, this is how it works. But this is by no means this is the end of the argument. This is, it's going to run and run, and I don't think anything today will necessarily have convinced Ping An of a different approach.
All right, well, we'll keep coming back to you for updates on this story. Bloomberg's Tom Metcalf, thank you so much. Turning now to the Federal Reserve, Minneapolis President Neel Kashkari says the Fed is committed to doing what's necessary to bring down inflation. 2% is the aim. He spoke on CBS's Face the Nation yesterday.
We're going to do everything we can to try to avoid a recession, but we are committed to bringing inflation down, and we are going to do what we need to do. And we are a long way away from achieving an economy that is back at 2% inflation, and that's where we need to get to.
Morgan Stanley's Mike Wilson, however, is warning that the Fed's tightening is leaving little room for stocks to rally. Kriti Gupta, Bloomberg Markets correspondent, joins us now for more. So, Kriti, obviously we're coming off the back of a huge week of gains as the market is kind of expecting that the Fed is going to push pause eventually. Right. But the indication from Neel Kashkari's comments is they have a mission. It's to bring inflation down, and that pause isn't necessarily coming soon.
Right, and remember, this also comes as you see financial conditions already tightening significantly into restrictive territory. So there's two sides of the argument. I'll start with the bearish argument. That seems to be the consensus, at least, where you do have this idea that the bear market that we've seen, the selling, it's not over. A lot of it tied to the Federal Reserve. We haven't been in this quantitative tightening environment, I'd argue, ever to this extent, and therefore the market just perhaps isn't prepared for it. At the same time, those recession fears are still really leading the way. So it is a sentiment story as much as it is a fundamental story, and that's something that David Kostin over at Goldman Sachs said as well. He said the earnings picture looked good, but those recession fears, we are still there. The fact that we hit that technical recession, well, as Mike McKee would say, that's really only a markets thing. No one else cares when it comes to the fundamentals. But then you do have the bull case as well, which is that perhaps the market has bottomed out. Perhaps the fact that we have hit that technical recession is the buy signal that a lot of people were waiting for. And people were so bearish going into these earnings that the earnings actually came out better. So there is a fundamental case for a little bit of a rebound.
We had an MLive survey, your former team, right, coming out with a survey on big tech and Elon Musk. 75% of the respondents think that Musk won't end up owning Twitter, which I can't believe it's not closer to 100%. What's the story with this lawsuit?
Well, the lawsuit is ongoing. I believe Twitter specifically is asking for a 5-day trial. Elon Musk is still trying to push for some sort of delay. From a share perspective, it looks like Twitter has the upper hand, at least from an investor point of view. So that's what we're waiting to see, whether or not that is actually true. But there is a macro case to be made here in that Tesla shares are a massive weighting in the S&P 500 to the point that if you start to see Elon Musk sell shares, which we've been here before, it does pull down the entire index as well. So that's something you want to keep an eye on. But also, his selling shares is not necessarily tied to his Twitter lawsuit because that kind of $1 billion breakup fee, it's not like the shares are going to necessarily pay for that. But he did also already try to hit that 10% level with the options, exercising options. Once again, he hasn't 100% exercised all of them. So this might not necessarily be related, but keep an eye on it because anything could happen, as we know, with this saga.
Indeed. Kriti, thank you very much. Bloomberg's Kriti Gupta on a range of subjects this morning. Over to Washington now. President Biden is isolating at the White House after testing positive again for COVID. He has a so-called rebound case that is seen in people who take the antiviral drug Paxlovid. The White House says the president is not experiencing any symptoms. Meanwhile, in the Senate, the architect of the Democrats' tax, climate and drugs bill, Senator Joe Manchin, is lobbying colleague Kristen Sinema to get on board. Manchin spoke on CBS yesterday.
This is fighting inflation. This is all about the absolute horrible position that people are in now because of the inflation cost, whether it be gasoline, whether it be food pricing, whether it be energy pricing. And it's around energy mostly. It's driving these high inflation. This is going to take care of that because this is aggressively producing more energy to get more supply to get the prices down. That's what we're doing.
Anne-Marie Hordern, Bloomberg's Washington correspondent, joins us now from D.C. Anne-Marie, really interesting to see a sort of role reversal, or at least a different role for Joe Manchin, having to persuade others to get on board with his position.
Yeah, and Anna, and that's because the Democrats need every single Democratic senator, 50 votes to vote for this in order to get over the finish line. They're using reconciliation to push this through. And we have yet to hear from Kyrsten Sinema's office, except for the fact that they want to see the text. And we likely won't hear from them till the end of the week when we get the Senate to fully scrub the bill for non-budgetary items. But he was making this plea that there are a number of items in it that he thinks she can really sign up for and that she's been pushing for, especially when it comes to lowering prescription drugs, giving Medicare the ability to negotiate lower prices. Also, when it comes to taxes, something Kyrsten Sinema, the senator from Arizona, has been against is raising taxes. He says this is about just a flat 15% corporate book tax, especially for those companies that are getting a lot of these tax breaks, and also closing the carried interest loophole. He says it's about closing loopholes, not about raising taxes, but this is something she was against in the past. This is something that Joe Manchin wants to certainly see in the bill alongside many others in the Democratic Party. We'll see if this is something that she can muster through.
In terms of Nancy Pelosi, we're watching her trip in Asia very closely. We still don't know whether she's going to Taiwan, right? But the Chinese have said they'd be pretty aggressive in their response if she does.
Yes, they have been. We've heard from China's military putting out a statement which hinted that they would take an aggressive response. We've also seen over the weekend live military drills off of the Sichuan province, which is directly across from Taiwan. Now, what we do know is that today, Speaker Pelosi is in Singapore. She released a statement yesterday that outlined and detailed the itinerary of the trip. It included Singapore, Malaysia, Japan, South Korea. It didn't include Taiwan, but Matt, as you say, there's still this speculation. It is swirling and doesn't mean, because it wasn't in the official statement, that she will not make this stop. Obviously, there are some risks given how outspoken China has been about making sure they do not want her landing in Taiwan. And you can see that across really the Chinese press over the weekend and even parts of last week.
All right, well, we'll continue to watch for updates to her itinerary. Bloomberg's Anne-Marie Horton in Washington, thank you so much. Now let's get back to the markets and take a look at some stocks we are watching in pre-market trading in the U.S. this morning. One of them being Warner Brothers Discovery. It has a new movie out, The League of Super Pets. It's an animated film. It actually topped the box office here in North America over the weekend, pulling in about $23 million. So that is leading the shares higher by a little more than 3%. You also have Boeing moving higher, and there's a couple pieces of good news here. On the one hand, the company has avoided, at least for a few days, a strike that was supposed to start today, affecting of around 2,500 workers, which would have really crippled its factories. So the fact that that is not happening today is a piece of good news. The other piece of good news comes as its approval for some tweaks to the structural issues in the 787 Dreamliner have been approved by the FAA. So that is a step forward in getting that plane off the ground, which has effectively been halted in delivery since late 2020. So that stock is up more than 3% as well. To the downside, though, basically anything tied to cryptocurrencies, because you are seeing Bitcoin taking a leg lower for a second day. One of those being Coinbase. It's down about 2% this morning. And of course, this is a stock down more than 70% year to date, Anna.
Okay, we'll keep watching that one. Coming up on this program, Melanie Baker, senior economist at Royal London Asset Management. We'll look ahead to lots of macro events this week. The Bank of England's rate decision, of course, jobs data out of the United States at the end of the week. We will also have that conversation that I mentioned earlier with the mining mogul, Andrew Forrest. He joins forces with Senator Joe Manchin. We will discuss their energy goals. Plus, Germany is caught in Putin's gas trap and running out of time to escape. Read more of today's Big Take story on Bloomberg.com or by typing NI Big Take into your Bloomberg terminal. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. And we're looking at the possibility of a technical recession. So many people have been debating whether or not we're in a recession because we had 2 quarters of back-to-back contractions. Now, that has happened before. For those of you listening on radio, I'm standing in front of a chart that I guess illustrates that. But the last time it happened was in 1947. So what this chart to me really illustrates is it's been a heck of a long time since anything like that has ever happened, over 75 years. Tatiana Dare joins us from Bloomberg Markets now to talk about this. Tatiana, what do you make of the recession or not recession debate?
Yes, Matt, like you said, it typically history suggests that 2 back-to-back negative quarters mean a recession, but it has happened in the past where we've had just 2 negative quarters and no full-blown downturn followed. That was in the second half of 1947. After that, the U.S. economy rebounded before falling into a full recession the following year, as defined by the National Bureau of Economic Research. But we'll have to see, the most important thing here, we'll have to see if this numbers will be confirmed, right? We've heard from Chairman Powell saying that the first readings of the GDP reports should be taken with a grain of salt. But unfortunately for markets here, we will not see the final numbers until September 29. And by then, the Fed needs to make its next move and investors need to make their investment decisions too.
Interesting on this subject, Tatiana, one of your colleagues, Simon White, writing on the Markets Live blog, that exclusively technical recessions are actually worse for stocks than ones that turn into full recessions. So maybe we should be careful what we wish for on that front. Let me ask you what you make of the Fed in the week ahead, Tatiana, because we could get some pushback from various Fed officials on what the markets did in July, essentially, if the markets were getting ahead of themselves in the Fed's view.
Yes, exactly. And we've already heard from Neil Kashkari, although he's not a voter on the FOMC, sort of pushing back on those moves, saying that the Fed has been surprised to see, this rally in stocks, this rally in bonds on the back of what still sounded like a hawkish statement and, a hawkish Chairman Powell. So I think we could see similar statements from Fed speakers here, given that financial conditions have tightened so much. I think I saw mentioned they've are now looser even than the hike back in March. So definitely some pushback on the market reaction here to be seen from the upcoming Fed speakers. And the one to watch, I'll say, will be Bullard, because he has been the leading speaker for this Fed hiking cycle. So that's the one I'm watching tomorrow.
One to watch. Tatiana, thank you so much. Tatiana Daria joining us there, Bloomberg Markets Live team. And for more market analysis, check out the Markets Live blog. MLIV Go is the function on your Bloomberg terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. China's economic rebound is still fragile. Factory activity unexpectedly contracts in July, and property sales from the country's top developers continue to fall. Sporadic COVID outbreaks have led to more government restrictions, hampering the economy. The Fed renews its pledge to reduce long-term inflation to 2%. Minneapolis Fed President Neil Kashkari says the central bank will do whatever's necessary. He told CBS faster inflation is being driven by supply chain disrupted by the war in Ukraine and other factors. And the fate of the Senate Democrats' tax, climate and drugs bill may be up to one senator. For now, Arizona's Kristen Sinema isn't saying how she'll vote. The bill architect, Senator Joe Manchin, has publicly told her the measure doesn't raise taxes. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And Matt, we had this sort of divide across the Atlantic. European stocks driven higher by bank earnings. We'll wait and see whether that helps to lift futures at all in the US as we go through the early part of the US day.
Yeah, absolutely. It hasn't so far. Right now, we're still looking at a drop in futures of about 0.3%. So that follows, obviously, a tremendous month of July. We were up more than 9% for stocks in July. And I think the last week of June, we were up more than 6%. So it's been a great run. If you want to call it a bear market rally, that would make sense, although some people are now starting to say maybe we've turned the corner. The U.S. 10-year yield is up almost 2 basis points right now at 2.6667. So some gains in the yield as investors let go of that debt, meaning they're more sanguine about the recession concerns, possibly. Also, the yield on the S&P is now much higher than the yield on 10-year, so that could help stocks as we get into the session today. NYMEX crude is down $2 a barrel, 96.60, so it doesn't help the oil producers, but it should help a lot of the industrials there. And then Bitcoin right now down almost 2% at $23,364, a relatively high level for Bitcoin, so maybe a little bit of profit taking, and also obviously it's strongly correlated. Kailey, what do you see in terms of pre-market movers?
Well, with that move lower in Bitcoin, you are seeing some of those crypto-related equities under a little bit of pressure in the early hours trade here in the U.S. Among them, Marathon Digital, which is down nearly 4%, and Riot Blockchain is down more than 3% as well. And Matt, you were talking about how oil prices are a little bit lower today, trading around 96, a 96 handle on WTI. Of course, we had heard from the big oil majors, Chevron and Exxon, on Friday. They beat earnings expectations. They were just killing it in terms of the profitability of their business, with not just higher oil prices, but higher refining margins as well. They're giving back a little bit of those Friday gains, though, today as prices move lower, each of them down about 0.9% before the bell, Anna.
Yep, and the European equity session, let's check that out then, Kailey. And we are lifted by the bank earnings story, it seems, here today in Europe. The Stocks Europe 600 up by just 0.2%, so not by too much, but the bank sector doing pretty well. HSBC, you see the share price there, up by 5.7% in the London session. That helps to lift the London market overall, of course, because of the size of that stock. It is by points terms, it is the biggest contributor to the upside of the Stock 600 today. And this is to do with higher interest rates, and this is a bank that is benefiting from those. and talking about dividends and return of cash to shareholders as well. In terms of percentage increases, the biggest gainer on the Stock 600 is Pearson. This is the online publishing business, and they beat estimates with their earnings. They are also talking about cost cuts, which some of the analysts seem to like quite a lot. The Italian 10-year yield actually just above 3% now. Earlier on, it had just dropped below 3%. We saw some strength in the Italian stock market as well as a result. There had been this conversation going on in Italy since the end of last week, when we got some news flow that suggested that the person who's most likely to take over, at least according to polling, at the forthcoming election in September, that she wouldn't necessarily rip up all the European fiscal rules. And so as a result, there's been some optimism around what that means for containing spreads around Europe, Matt.
Excuse me, just sneezing there. Okay, now joining us is Melanie Baker, senior economist at Royal.
Let me know if you need me to step in.
Yeah, well, you know what? Sometimes this happens. It's live television, but I'm fine. I'll test myself later. Senior economist at Royal London Asset Management, Melanie Baker, joins us to talk about what we're seeing in terms of the recession debate right now. Melanie, how important is it whether or not we're in a recession? I mean, as long as we're looking at, 6-7% nominal growth and 3-4% unemployment, aren't we doing okay?
I mean, I think real activity does really matter, but there is a difference between, technical recession and a kind of more serious recession. And one of the key things for me really is what happens to the labour market. So do we see recessions accompanied by significant falls in employment and rising unemployment? I think that would be a very different proposition for markets generally than, for example, what we've just seen in the case of the US, which is your 2 consecutive quarters of negative GDP growth, your technical recession.
OK, you mentioned the jobs picture. How much then is riding on the jobs picture? We get jobs data, of course, on Friday, Melanie, and a lot of people cite that as one of the things that stands between what we have now in the US and what many people would say a recession looks like. So the jobs picture then seems very important, but others say, well, hang on, it's a lagging indicator, so how can it really alert us to recession?
Yeah, I mean, there are a number of different indicators you can look at with the labour market. Some are a bit more forward-looking than others, but yes, you're right. It is, to some degree, a lagging indicator. I'd look first at employment rather than the unemployment rate. That's sometimes quite hard to read, especially when you've got a changing participation rate. But I think if you want a full picture about how serious a recession is, you really still do need to take into account that labour market picture.
Right, yes, so need to take that into account. Thinking about what's happening here in Europe, we have the Bank of England meeting this week to talk about interest rates. Melanie, how quickly do you see the Bank of England putting up rates? At some point, there was guidance from the governor himself that 50 was on the table, but then the market sees all the data coming in and isn't sure what to make of that.
Yeah, no, there's a good chance of 50 this week. I mean, my forecast assumption is that they go another steady 25. But yeah, absolutely, you're right. They explicitly put 50 on the table. And, we're still in a state in the UK where, inflation expectations still look above their long-term averages. We've still got a tight labour market. Pay growth is pretty robust. And of course, headline inflation is extremely high. So, a good chance of 50 this week.
Headline inflation also extremely high in Europe, Melanie. We saw a fresh record last week, and the 50 basis point move is on the table for the ECB at the September meeting as well. How much further realistically can they take it, given the deterioration and what is looking like an inevitable recession in the Eurozone?
It's very difficult. Central banks are in a very difficult position, but I do think we will get higher interest rates everywhere. I think they have to focus on inflation. Their inflation targeters. Don't think the deterioration in the data that we've seen is enough to stop them. I think that's more of a maybe a mid-2023 story.
Fair enough. So we may have some time until we actually see any pivot on the part of central banks. Obviously, as we're talking about tightening and on the part of the ECB and BOE and the Federal Reserve. In China, we're talking about loosening and whether policy will get even looser considering the weakness we are seeing in the data there. As you look at the PMIs that came out overnight back in contraction territory, how do you view the China growth story and the risk it poses to global growth?
I think it could be a real decider about in terms of how strong or weak overall global growth is. It does seem to be at a very different point in its it has been at a very different point in its cycle than the rest of the world, partly because of what has been happening in terms of the COVID picture. And I think if I think about the second half of this year into next year, I'm still really quite worried about the China story. For as long as they maintain the zero COVID tolerance, I think we have to worry about continued weak Chinese growth.
If they let that go, or if they continue to stimulate and open up, Melanie, are we looking at big demand for oil, another rise in prices globally?
The degree of stimulus just doesn't look big enough to me for that, and especially once you're offsetting that with what's going on in terms of COVID and the natural sort of dampening of demand that comes with that and the zero tolerance approach. So I just don't think we've seen or are seeing enough.
Melanie, thank you very much. Thanks for joining us. Melanie Baker of Royal London Asset Management. Coming up on the programme, mining mogul Andrew Forrest joins forces with Senator Joe Manchin. And Forrest joins us next. We will talk about energy transition. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, former U.S. Treasury Secretary Jack Lew. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Well, the climate and tax spending deal announced last week by Senate Majority Leader Chuck Schumer and Senator Joe Manchin of West Virginia would boost companies with a focus on clean energy. And Fortescue Future Industries is looking to invest in the U.S. and grow the green energy industry. Andrew Forrest, founder and chairman of Fortescue, joins us now for more. So, Andrew, as you look at the package and what is proposed, what do you think it will accomplish in terms of the energy transition here in the U.S.?
I think it'll bring on a huge new source of energy for every North American, and huge new employment, particularly for the coal states, West Virginia, Wyoming, Ohio. They are now looking at really serious employment, repurposing those coal-fired power stations, those tired old assets where employment was looking pretty shaky in short term. I think we're going to turn those permanent, because that is what green energy is, of course, is permanent. So I think you'll see massive investment, real employment job growth, but most importantly, you'll see an increasing standard of living, because it'll help fight inflation for every North American.
I know Fortescue Future Industries, Andrew, is focused on green energy, but of course, when I think of Fortescue, I think of mining. When I think of West Virginia and Joe Manchin, I think of mining. How did the two of you come to work so closely together?
Look, I actually met Joe at the International Energy Agency in Paris, and I just said to him, listen, you've got a real coal employment problem, but hey, Senator, there's no one in the world who's loyal to coal. They're loyal to employment. They're loyal to their communities. They're loyal to their families. That's what we got to keep going. And I really got his interest, and he said, well, how do you do that without coal? And I said, with green electrons, with green hydrogen, we can use those old power stations, all that old infrastructure, and we can drive employment, we can drive economic growth, and we can drive down inflation. But you need to support green energy, Senator, because that's the future.
And I mean, this bill, it's kind of shaky. It seems to all hang in the balance of whether or not Kyrsten Sinema votes for it, or even if any senator gets COVID and can't vote, it's going to be a problem. Without this bill, Andrew, what happens to investments like yours?
Look, I think without the bill, I just have to be very honest, there are other countries and other regions of the world who are offering really attractive inducements, because they all see that the world needs a huge new source of energy, which isn't Putin's fossil fuel. And that's, of course, Europe. And investment dollars will have to flow from North America, from West Virginia, into Europe instead. I just see that the natural home for large investment dollars to create a huge new superpower in green energy is North America. And if it can be sprung out of West Virginia, if it can be sprung from this anti-inflation bill, that would be historical, and that's what should happen.
It's a really fascinating prospect, and one that many countries are trying to get right, isn't it, Andrew? To take communities that have been dedicated to fossil fuels and to turn them into something else, hubs for new energy. Give us your perspective as perhaps a bit of an outsider in the US context, your perspective as to where the conversation on climate and policy is going in the US. Because from the outside, it can look extremely polarized, and yet every now and again, progress is made.
Yeah, look, I've been into the heart of the coal belt, into the heart of those people who, and those communities and states where they're saying, oh, we're really worried about green energy, we want to stick with our fossil fuels. And I've explained to all those hundreds of workers who I've had the good fortune to meet to say, hey, what are you actually loyal to? Your family, employment, your careers, or some grotty little substance which does kill people called coal? And they've said, well, of course, we are loyal to employment. We're loyal to our families, our community. I said, right, well, then you need green hydrogen, you need green energy, because that is permanent, that is clean, and I need a lot more workers than what's currently employed by the coal industry to drive and help catalyze a huge new green energy industry in North America. And this bill brings in huge new energy. Doesn't matter if it's green or purple. What matters is that it's huge new energy. That's great for North America. It's great for the North American standard of living, and it's great to fight inflation.
And Andrew, you mentioned this as being North America's, win, something that North America can do well out of, this transition. And perhaps you suggest that if Europe doesn't keep up, it'll be Europe's loss. What role do you think that green hydrogen can play in the European energy mix? Maybe not in the very short term, where we perhaps face a crisis, but looking longer term.
Well, I think that green hydrogen in 24, 25, that's just around the corner. If I was the Kremlin trying to finance a long-term war, I'd be taking into account that huge sources of green hydrogen can fully replace my coal, my oil, my gas, which I'm relying on to bomb innocent civilians in Ukraine. That's all going to get replaced with a fuel you can't make, which is green energy, green hydrogen, green ammonia, green methanol, all from that miracle molecule. That can be all made in North America. You've got almost infinite sources of solar, wind, geothermal. It is a great place. And I think the anti-inflation and Manchin bill to really drive that new energy into the American economy is really clever. It'll steal the march on many other regions of the world. It could well turn North America into a green energy superpower. It already is in fossil fuels. There's no reason why it should not be both.
Yeah, and of course there are challenges with green hydrogen. It's pretty expensive and it takes a lot of energy to make that energy. So the scaling question is definitely there. Finally, if we could go back to Fortescue's legacy business, which is a backbone of iron ore, looking at China in particular, the PMIs we saw overnight, the further deterioration in the economy showing just how fragile that recovery is as they continue to pursue COVID zero policy. What are you seeing in that market and what the demand picture looks like?
So, Anna, just to pick up, we are working out very well how to store and transport green hydrogen. So it's a bit of a myth that there's huge scale-up issues. I am a king of scaling up. I've started a company from nothing. It's a $50 billion company. It's one of Australia's largest companies. We've scaled up new technology, which didn't exist before we started. We're doing the same thing with hydrogen. But to turn to China, and I have to say that I've built a career on believing what the Chinese government says it's going to do with its economy. I don't mind, what they say about their politics, their foreign relations, et cetera, et cetera. But when it comes to their economy, you've got 1.4 billion people who listen to those statements. And Chinese politicians and statesmen tend to be very accurate about that. Now, they are still forecasting economic growth. I think their zero COVID policy has been really tough on their economy, but they know how to manage themselves, and they've always grown that economy for decades now, and I don't see that stopping. It's not the old Communist Party of Russia, which was bloody clueless. You're talking about some of the smartest business people and well-educated business people in the world in control of that economy, and they want economic growth.
Andrew, thank you very much. Thanks for your time. Andrew Forrest, founder and chairman of Fortescue. Thank you for joining us. Coming up on this channel, we will discuss the tax climate bill with Senator Pat Toomey, Republican from Pennsylvania. That's at 10 a.m. in New York, 3 p.m. in London. So stay with us for more on that conversation. This is Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. I'm Matt Miller with Kailey Leinz here in New York. Anna Edwards with us out of London. Tom Keene joins us right now, co-anchor of Bloomberg Surveillance, the original. Tom, what's your single best chart to kick off the week?
Kick off the month as well and really dive maybe into an early autumn. And it's about what is moving. And it's a surprise, Matt. It's really the one chart off the Bloomberg terminal that speaks volumes of the change of the last 6 weeks. That's the inflation-adjusted yield. This is the 10-year real yield. The stasis we remember 20 years ago with a very substantial real yield, and then the great disinflation as the real yield came down and has been amply negative. Here, up we go above the zero mark. We all made a big deal about that. And Matt, we rolled over, and this week we may test the zero mark again.
Okay, back to zero potentially. With that in mind then, Tom, who do you want to speak to this Monday?
What I want to talk to is about this great bull market. I mean, there's just no other way to put it. It's interesting to see people adjust, recalibrate over the weekend. But to have Ben Laidler with us to start off, I think is very strong. Stuart Kaiser will join us as well. And really looking forward to speaking to William Cohen. We will speak to him later in the program, the former Secretary of Defense. He's truly one of the most interesting politicians of our generation, well-timed with the Speaker of the House in Singapore.
Yeah, and will she go to Taiwan? I'm sure you will ask him about that as well. Tom Keene, thank you so much. Looking forward to the conversations over the next 3 hours. And as for what else we're looking forward to today, I will be watching the ISM manufacturing data coming out at 10 a.m. Eastern time. We're expecting it to come down a little bit to the 52 level, so that would still be expansion territory, which of course is anything north of 50. So activity is slowing, but maybe things are improving, at least on the supply side. For so long for manufacturers, the issue has been on supply chain challenges and on that end of the equation. Now the question is around demand and whether that's deteriorating as we see a softening in the broader economic environment. So we'll pay attention to that and the new orders figure in particular, Matt.
Yeah, that'll be definitely something to watch, especially as we debate about whether or not the economy is in a recession. I'm watching Nancy Pelosi in Asia just because I think this is one of the most exciting games of chicken that I've seen a politician play lately. She is clearly considering or had considered going to Taiwan. Now her silence makes you wonder whether or not China's got the upper hand, because they essentially told her, do not go there, and have been incredibly aggressive about it. So now with her itinerary released, but nothing about Taiwan, the question is, does she actually get there, or does she avoid it in order to give China the win here? I think it's going to be very interesting.
We'll continue to watch her movements then. I'm watching crop futures falling as the first grain ship leaves the Ukraine port of Odessa since the war in Ukraine began, of course. We saw that deal struck between, Turkey and the United Nations, helping to bring Russia and Ukraine together of sorts to strike that deal some weeks ago. And now we've seen the first grain ship leaving. You can see on the map go function, you can see the ship involved, the Razoni, a cargo ship carrying more than 26,000 tons of corn. It is bound for Lebanon. It's due to arrive in Lebanon a little bit later on this week. There are more vessels trying to get out of the Black Sea. Can they get the insurance and the crews they need to do that, though? Worth keeping an eye on those on the map go function on the Bloomberg. That is it for Early Edition. More surveillance is ahead. They'll certainly be talking about the real yield, as we heard from Tom Keene a little earlier. This is Bloomberg.